Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, rates may have fallen, but Canadians are still feeling the pinch. And what to own when a handful of stocks move the whole market. Plus, why do businesses hate the new greenwashing law? That's all ahead. First, for the week that was in business, it's time for the briefs. A read on inflation in the U.S. this week was closely watched for signals about the path of rates there. Inflation in June dropped to 3%, but prices from May to June actually declined slightly. That's the first monthly drop in years. U.S. Federal Reserve Chair Jay Powell said the bank is watching the data for evidence inflation will continue to cool, but is also keenly aware of rising unemployment, which would call for lower rates.
Are we sufficiently confident that inflation really is moving down toward 2%? I do have some confidence of that. I think we've seen that over the past several years. The question is, are we sufficiently confident that it is moving sustainably down to 2%? And I'm not prepared to say that yet.
Liquor store workers in Ontario were on strike this week, at least in part to protest the opening of sales to other stores. In response, the Premier posted an interactive map showing consumers where they can buy booze while the strike is on. And in BC, a strike notice from dock workers has been deemed illegal by the Canadian Industrial Relations Board, which ordered the union to take back the notice. Boeing reached a deal this week to plead guilty to criminal charges in the U.S. related to the crash of two MAX planes in 2018 and 2019, which killed 346 people. The agreement would include a new fine of $243 million. It doesn't cover any more recent incidents, including the door blowing off a plane. Members of NATO met in Washington this week. The occasion of its 75th anniversary was used by leadership to call for adequate defense spending by member nations. Canada wasn't singled out, but spends less than the 2% of GDP NATO membership requires. Even that level is too low, according to NATO's Secretary General Jens Stoltenberg. Maple Leaf Foods said it will spin off its pork business into a separate publicly traded entity while retaining 20% ownership. Maple Leaf said the move will allow it to focus its attention on its consumer brands. And those are your business briefs. A new survey of consumers finds that they are stressed, with more than half of households saying their income is not keeping up with inflation. A third think bills and debt will rise over the next 3 months. The survey was conducted by TransUnion. Matt Fabian is Director of Financial Services Research and Consulting at TransUnion Canada. Thanks for being with us.
Oh, it's a pleasure. Thanks for having me.
So we do have the beginnings of interest rates coming down, relief on the debt front. Were you surprised that there's still so much negativity?
Yeah, a little bit. I think, consumers are still feeling a little bit of a lag on that. And even though we have seen inflation come down, interest rates just more recently come down, I think it's going to take a while for consumers to feel that relief.
And what will you watch for in terms of where that relief will show up?
A couple of things on the survey side. We'd start to see more sentiment around optimism for the future, that they're able to make bill payments, that they're feeling more comfortable about their household financial situation. And that they're making positive changes in terms of their credit behavior. On our credit data side, we'd look for delinquencies as the real bellwether for that. Are we seeing a sort of a smoothing out of delinquency rates?
We, of course, Matt, know that heading into the pandemic, we had high household debt in this country. We were over our heads already. Pandemic actually introduced some interesting elements, right? Some households actually managed to save more. There was extra money for a variety of reasons. As we come out here, we do see unemployment ticking higher. Are you worried that we're going to go back to we've got too much debt and now some of our jobs are at risk?
I think for certain segments, I think what we saw coming out of the pandemic was more of a bifurcation of the market. We saw certain segment of consumers that had high household net worth, high household savings, and others didn't. I think that's where we're seeing pockets of stress right now is, for the most part, Canadian credit consumers are relatively resilient. They've been able to weather the pandemic. They've been able to kind of mostly weather high interest rates, high inflation. But there is a small segment of consumers that is struggling. And depending on how long interest rates stay high and some components of inflation stay high, that segment's going to continue to struggle. And that's really what we're looking at.
And for that segment and I guess all of them, when we do see this sort of level of concern, does that affect our spending behavior? Do you worry about the knock-on effect to businesses and services that we may not be using because we're worried about the future?
Absolutely. The number one thing that consumers in our survey tell us that they're going to do when they're feeling a little bit of stress in their wallet is reduce discretionary spend. And so obviously that has a knock-on effect in terms of retail spend and those kind of things in the economy. And so if consumers to a large degree decide we're going to really cut back hard on spending, that obviously has future consequence.
Do you feel as though people have enough room in their budgets to make a change in their behavior in order to make up for shortfalls, or are most people stretched pretty thin already?
Again, I think it's a divided market. I think for the most part, many consumers do have enough, and it's really just making trade-off choices of where they're going to spend and where they're going to allocate discretionary income. For those that have less room, they're really forced to make those difficult trade-off choices on with inflation. Are they going to allocate their income towards groceries and food versus paying down debt? Mm-hmm. And B, even where that money's coming from. We see from the survey, a lot of them are withdrawing from investments and retirement savings and things like that to make ends meet. So I think, for that segment, that's more worrisome.
Matt, so good to have you for this. Appreciate your time today.
Of course.
Matt Fabian is Director of Financial Services Research and Consulting at TransUnion Canada. Coming up, buying a broad basket of stocks is supposed to diversify your risk until it doesn't. Stay with us.